some of BIS commodities. Taking a look at the ag markets at the close of the second week of June. Let's just start out by seeing where we closed for the week. Taking a look at July corn up 13, almost 14 cents on the week, just shy of 4.38 last trade in the July contract today. Dees corn up 17 cents. Right shy at 4.49 today, and that's a high close on the week as well. Beans, the opposite, down almost 18 cents in the July contract, 11.60 last trade. No beans down to 15.5 cents, just a hair over 11.47 was the last trade in the November contract. July wheat down 15 cents, 4.81 is where the last trade occurred. Over in cattle, June cattle closed down $5.72 this week, down at 116.72. June hogs expired earlier this week at 81.60 in the June contract. The July took over, up 47 cents on the week in its contract, the league contract now, and it closed at 86.17 on the week. The dollar, as the time of this broadcast, looks like it's going to close maybe 40 points or so lower, right around that 94.30 area. In the index, crude looks like it may close somewhere around 50-60 cents lower in the week, 48.15 area. The CRB index of note is looking to close this week lower. First time in 6 weeks we've seen the CRB index close lower, and again that's a basket of weighted basket of commodities. So we're seeing a little pressure on that index this week. Taking a look at the grain markets, it's obviously a full-fledged weather market right now. Rains, hot, heat, what to expect. We went home last Friday expecting to see rains across the majority of the Corn Belt. We changed that forecast Sunday night. We opened very strong. We go home today with futures closing at the high end of the move here. We're expecting some heat next week and not as much rain. And Sunday night's open could be 15 higher. I fully expect to see 10-15 higher, 10-15 lower, and I think that's the market we're in right now. Technically, very strong closes. As I mentioned, we did close higher on the week for corn. For beans, not so much. We actually closed lower on the week for beans, and we're seeing the charts just maybe topped out here for the time being, and meal as well. And I think what we're looking at here is weather's a much more important aspect of the trade as pollination occurs in the few short weeks, and I think that's why we're seeing corn as the leader with the weather concerns. How much weather premium is in the market is yet to be determined. Historically, we're looking to try and get price protection in place or some sales in place this time of the year. And historically, if we grow a normal year, this is the time to do it. The determination again is what are we going to expect from Mother Nature over the next couple weeks. So as far as any type of outside influences on this market right now, maybe take a look at the vote next week with Great Britain voting to possibly leave the European Union, which would maybe put some strength in the dollar, maybe a little pressure on the commodities. Maybe we'd see some of that outside money that's been flowing into the commodities maybe deciding to get out of the commodities and out of their short dollar positions. That could have an effect on it. But right now, again, the weather looks like it would be the main driver in here. Taking a look at the cattle trade, volatile trade again this week, following last week's volatile trade. And again, we did close lower again on cattle. Cash was weaker this week as well, and the cutouts fell off toward the end of the week as well. We're trying to find some stability in the charts here. We're right down here at the bottom end of the trade as far as the charts are concerned in a lot of the cattle contracts. I think the pressure on the market may have been concerns about demand. We did see exports jump 20% on the week. though, but the trade is expecting a weaker cutout. The question is demand down the road. And weights have yet to back off as we see those 2-week lagging slaughter weights coming out. So technically, again, near the contract lows, look for some support to develop there next week. That area certainly needs to hold. Hog futures, the exact opposite of candle right now, continue to push higher. Futures are leading the way higher. Cash futures are leading the way lower. Cash trading at a premium to the futures. Futures are leading the way lower in the cattle market, whereas the exact opposite with hogs. And with futures running up hard, the August contract pushed $90 this week. Cash has been trying to follow to this point. One thing of interest is exports were down a little bit this week, but the trade believes China is in here with a lot of buying power as far as pork concerned. One thing interesting to take a look at, though, is this week's Commitment of Traders report. It shows which way the managed money is pushing into. And right now, the managed money owns 20% of the open interest, or has 20% of the open interest in the hog futures. And they're long around 64,000 contracts. So the money's been in here. The outside money has been in here buying hogs. Cattle held firm this week, not nearly as long from the managed side, around 24,000 contracts. And taking a look at the grain markets as far as the managed money or outside money coming in and out, corn has seen another big increase this week, 45,000 contracts coming into the corn futures, 252,000 contracts long right now, and we certainly have added to that because this report is a laggard report. It's through Tuesday of this week. So we're still seeing money flowing in here, and we're starting to build a pretty large position now in corn. Beans, we have not seen them build their positions in beans over the last couple of weeks, holding right up there at the all-time highs, right around 210,000 long contracts in beans. So certainly they have some risk premium involved here in these markets or in the grain markets, the hog market as well. And again, we're going to wait for Sunday night, and that'll be the Sunday night's weather forecast will be the driver in these markets. If you have any questions about these markets, please feel free to give us a call here at BIS Commodities at 1-800-373-2525.